Investors repricing how the Fed moves forward. Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Bonnie Quinn. We are kicking you off to the closing bell here in the United States. Let's get a check on those markets because that sell-off has been arrested. So the Magnificent Seven are back in form. Not all of them, but we did have a nice rally in the likes of Nvidia, particularly Google as well. Although those rallies are coming off the boil a little bit, you do see that the index is still up more than 2% as a whole. So it's essentially risk on today. The other theme today, well, one of the other themes, is the two-year yield just below 2.74%. It's at a high that it hasn't seen since last December. This is on the investor base repricing expectations. Also, Goldman Sachs coming out and saying possibly 3 rate hikes this year, 8 cuts this year from the Federal Reserve, not 4. In fact, swaps for June are pricing less than a 50% chance now of a June rate cut. The yen is an interesting one to watch. Nikkei came out and said that basically, yes, we are going to see in just a few hours the Japanese Monetary Authority abandon yield curve control. It would be a massive move. And then oil, Scarlett, I know you've more to say on it, but we're just about to tip up to $87 a barrel on Brent.
Well said. And to follow on that, oil hitting that fresh 4-month high. And in fact, it builds on its best weekly rally since February. And this as the biggest oil companies gather in Houston. So we go live to Houston this hour for Alex Steele's sit down with ConocoPhillips CEO Ryan Lance. From big oil to big tech, AI makes for strange bedfellows, with Apple now in talks to build Google's AI engine into its iPhones. And chipmaker Nvidia hosts what some are calling the Woodstock of AI. Nvidia CEO Jensen Huang is scheduled to give remarks after the closing bell. We'll bring you the very latest. And central bank palooza. We've got policy decisions from the BOJ tomorrow, as you mentioned, Vali, the Fed on Wednesday, and the BOE on Thursday, among plenty of others. In fact, this week features central banks setting policy for almost half the global economy, Bonnie.
And we are continuing to get surprises, Scarlett. So just a couple of weeks ago, we weren't absolutely sure if the Bank of Japan might actually exit its yield curve control mechanism. Now that's looking very, very likely, especially after that Nikkei report. Many traders, though, saying what actually happens to the yen will depend more on what the Fed does this week as opposed to the Bank of Japan, ironically. Well, this is the Fed's dot plot back in September. The orange line was the median dot on the dot plot. As you can see, we have expectations now below 3 cuts this year. That's the first time that that has happened. If expectations are below 3 cuts, well, then you think perhaps it's possible that we might see a change in the dot plot. That's what investors will all be focused on. It will just take 2 Fed members to change their dot plots lower in order for that dot to go lower, for that median dot, Scarlett. So that's what all eyes will be trained on Wednesday.
All right, perfect setup here. Let's kick things off this hour with Ed Al-Hussainy. He is the senior interest rate and currency analyst over at Columbia Threadneedle. Ed, fantastic to see you in studio. So are we getting a full reset here of the Fed outlook? Is that what the Fed is going to rethink?
I think it's unlikely to be a full reset, but perhaps a marginal one. You know, especially if we look at where we are today versus December. The Fed's kind of taking 3 things into account. 1, financial conditions have eased. 2, growth has been much more robust relative to what they were expecting into the end of last year. And 3, there's some haziness on inflation. Mm-hmm. And I hesitate to characterize what's happened to the inflation story more than just an additional of haziness over the last couple of months.
Okay, so we'll need more data before we can draw any firmer conclusions on that. Vonnie mentioned how the BOJ may just wait for the Fed. Is the Fed going to set the tone for the rest of the central banks that will announce this week, even as the BOJ is set to go before the Fed?
You know what? I think what's interesting is the fact that these central banks are going in different directions. And really, this is a reflection of the domestic inflation stories that are unfolding. Inflation is most robust here in the U.S. The Bank of Japan is changing policy really for the first time in about 10 years, exiting negative rates. Where they'll go to next year is really a function of what happens to inflation domestically. Let's recognize monetary policy is quite restrictive here in the U.S. It is nowhere near restrictive in Japan, and will stay that way for the remainder of the year.
Ed, if we're now looking at less than a 50% chance that the Fed will cut in June, is there enough time for 3 rate cuts in the rest of the year? Isn't the data not moving fast enough in order to allow that to happen?
Yeah, I think it tells me kind of 2 things. 1, you're absolutely right. It'll be a tight fit. if they still want to do 3 cuts beyond June. But what it really tells me is that markets are exceptionally unstable, and they're quite happy to reprice the Fed from 150 basis points at the beginning of the year to about 75 today. We'll see if we can get to 50, but they can move the other way just as fast.
The longer this continues, the more we're at risk of a sort of an outlier event, right? So if we get one jobs number that's a little bit freakish or what have you, will we see a lot of turmoil?
Really hard to say. Let me look at the starting conditions here. One, where we are today with Fed pricing, I think is much more realistic versus where we were in December. Right, again, 3 to 2 cuts this year, very much in line with the data. Credit markets, on the other hand, are very tight, very little risk premium left. So if I look across the board, if there are surprises one way or another, much more likely to see risk markets react more violently than rates markets at this point, in my mind.
So let's tabulate all of this. Easier financial conditions, more solid growth momentum, and that hazy inflation that you referenced. Where does that leave you? How do you want to be positioned? Yeah,
I think if I look across the curve, still nervous on the very front end here, right? You mentioned 2-year yields kind of plumbing those year-to-date highs. I think there's probably a little bit more room in the front end to reprice. The further you go out on the curve, the more real rate cushion you have against some of the short-term volatility. And so I think if I look beyond sort of the 5-year point, I get to the 10-year, the 30-year point, real rates there provide a very attractive cushion, particularly in the context of credit markets being priced so tight.
So if you're a corporate treasurer and you need to raise some cash or you want to raise some cash, what's the best way of thinking through what's to come?
Yeah, look, if you're a corporate treasurer at the moment, you're probably looking at the belly and thinking it's a pretty good deal. If you look at how things have evolved in the course of the past 6 months, corporate treasurers were issuing much closer to the belly into sort of the middle of last year. They started extending into the long end as demand came back, markets opened up after October. And now, if you're reassessing, I think the belly once again looks quite attractive. And the through line here is demand for corporate debt and treasuries is actually exceptionally healthy so far this year.
Ed, in terms of currencies, something like 8 of the biggest currencies are going to see their monetary policy authorities move or not move this week. It's really quite phenomenal, the stability that we've seen in currencies, including the yen. I mean, when the Nikkei report came out, we dropped to 148 and change. We're right back up to 149. What is your prognostication for currency moves in the next 6 months?
Yeah, it's amazing. Currency volatility is on the floor. It's a very attractive environment for what are called carry trades, where you essentially, you're long currencies that are high yielding. At the moment, the dollar within the developed market space is a relatively high yielding currency. And so as I look at central banks making these decisions, they're relatively incremental at this stage. We're not seeing a wholesale reassessment. And even coming out of Japan, look, you can see the yen strengthen a little bit, but relative to the dollar, it's still deeply unattractive. So if a Japanese domiciled investor, you're likely remaining long the dollar, long emerging market currencies relative to the yen.
If we do see the Bank of Japan exiting yield curve control in just a few hours and also stopping most ETF buying, does that not roil markets a little bit? I mean, the Nikkei 225, for example, has been on a complete tear. Surely that arrests that.
Yeah, I mean, it's a function of how long you guys have been talking about the Bank of Japan, right? So the markets have had a chance to kind of socialize the fact that this change is coming. The Bank of Japan has been sending smoke signals about this in the press for a long time now. And I'll point out, if you look at 10-year yields in Japan, they're way below the ceiling set by QQE. So we've not repriced all the way to the ceiling. There's a little bit of a cushion there. So in the short term, I don't think it's a massive sea change at this stage. However, if we take a step back, the Bank of Japan reorienting monetary policy, taking rates positive after 10 years, hiking for the first time really in 20 years, is a big deal. Eventually, they'll crystallize into something that's quite important for global rates markets, but perhaps not as fast as we anticipate right now.
All right, Ed, thank you so much for joining us in studio. That is Ed Al-Hussainy, Senior Interest Rate and Currency Analyst over at Columbia Threadneedle. As I mentioned, big week for global central banks with decisions out from the BOJ, the Fed and the BOE, among many, many others. Our Bloomberg surveillance team spoke exclusively with the CEO of Barclays, who shared his view on how policy impacts the banking system and why he's still betting on rate cuts sooner rather than later.
Lending is an important part of what we do. We are a very big player in the fixed income markets, in the debt capital markets, as well as fixed income trading. So lending is a part of what we do, but we're just trying to broaden it into more advisory and more equity-related revenues.
How much is this sort of a new model of banking that's basically taking all of Wall Street and a lot of the global banks too, which is trying to cater to the whole client rather than, say, go after specific deals and be focused on, for example, being at the top of a league table?
Yeah. I think it's an important part of the shift that's happening. And it's happening because previously, in the investment banking side, we were working with corporations. And since then, we still work with corporations in a very big way. But in addition to that, you've got the financial sponsors and the sovereign wealth funds. So the growth of concentrated pools of capital makes it important to have that full relationship with those players in the market.
This week, we do get a Bank of England decision. Is it beneficial if rates stay higher for longer, or do you want them to come down to support the economic growth and maybe some of the engine that John was talking about?
So ultimately, that's a decision they have to make. It's very important to balance.
Sure, but,
yeah.
you know.
You've got to make a call.
I actually think a little prudence and waiting a little is not a bad thing.
You think there is an option there to wait a little longer then? Why do you think so? Why is the bigger risk maybe to cut too soon and not to hold too long?
Well, I think that the economy is stabilizing. Employment is still robust. Inflation is coming down. So I think on the balance, it might be more prudent to wait a little longer. Now, our house view and that of many others is for more rate cuts over this year.
Would the same apply to the US? The same characterization of the situation?
I think so, yeah.
Well, but just, would that be good for you? Are high rates good for banks, or are they bad for banks? This has been a perennial question.
Stable rates are good for banks.
And that was the CEO of Barclays speaking exclusively with Team Surveillance earlier today. And Vani, of course, Barclays is its own behemoth, right? It's a massive investment bank, retail bank, credit card issuer. I like the story on the Bloomberg terminal that talked about PNC and Fifth Third, some of the more smaller regional banks in the United States, and how they're really trying to push this idea that banking is boring and there's not a whole lot going on. You don't need to be worried about, what happened last year happening again.
Yeah, I mean, brilliantly boring is the phrase they're using, which I guess it's not an oxymoron. I guess you can be brilliant and boring at the same time. But I don't know. I mean, there's something just a little bit derogatory about the word boring that makes me sort of think, well, I get it, but I'm not sure I'd want to bank there either. I don't think I want my bank to be fully boring. I want them to be coming up with interesting ideas for me and perhaps, another 10 basis points interest rate.
Right. That can't be boring. Everything else can be kind of boring in terms of the kinds of risks that they take, right?
Exactly.
All right, so the returns can't be boring. True. All right, coming up, a few more CEO conversations here on The Close. We've got Ryan Lance, Chairman and CEO of ConocoPhillips, joining us. His insight on the outlook for oil prices live from Houston. Plus, the CEO of e.l.f. Beauty marks 20 years in business by ringing the opening bell at the New York Stock Exchange. We'll discuss his forecast for 2024 and how it could be affected by a potential TikTok ban.
And we'll be all over AI as Bloomberg reports that Apple is in talks to build Google's Gemini artificial intelligence engine into the iPhone. All that and much more coming up. This is The Close on Bloomberg.
Let's turn now to the energy sector with WTI and Brent at 4-month highs, building on its best weekly rally since February. And there are a few signs of demand slowing down right now as well. Co-anchor Alex Steele is standing by now at our Houston bureau with the CEO of ConocoPhillips. Alex.
All right, Scar, thank you so very much. Ryan, it's good to see you.
Thank you. Good to be here.
Thank you for joining. Okay, oil 4-month high. What is leading it? Supply, demand? What's your take?
I think it's a little bit of both right now. We're seeing some recovery out of the Asian markets and some strength in the demand. A lot of it's led by refined products right now, gasoline and diesel, and some shortages that are developing there. But yeah, it's a pretty constructive market right now. The OPEC Plus group is continuing to restrain supply. U.S. is still growing a little bit, but it seems to be pretty balanced. Inventories are coming down. They're not growing a little bit. So it's setting up a pretty good short-term macro demand.
So do we think we're in a new range? Is it a 70 to 90, or you feel 60 to 80? What do you think?
Well, we've always been kind of 70 to 90 range. Okay. Feels pretty reasonable for right now in the near term.
So what we've also seen in the near term is so many of your peers going out with some big M&A.
Yeah.
Now, what's interesting about Conoco is you guys have always done things like 3 or 4 years before other companies do, and you're not buying anything today.
No.
What are you doing instead?
Well, we're kind of leaning in. So we sat back a few years back and thought we're going to see a pretty constructive market going out over the next number of years, probably the next 5 to 10 years, well above our mid-cycle price for that equilibrium world. So in doing so, we thought M&A is going to be a little bit difficult in this kind of a market. When prices are above your mid-cycle, it's tough to transact. And but we looked at what we could be doing as a company, and that's where we wanted to start leaning in on the LNG side of the business, leaning in on some longer cycle projects like our Willow project in Alaska. So we're really spending time and spending some money doing that, but not at the expense of returns to our investors. So we're delivering competitive free cash flows to our investors while investing over the long term in some of these longer cycle projects, because we think we're at the beginning of a very constructive period in the macro. So now is the time to lean in on some of those opportunities, and we have a rich portfolio of them.
Is that a super cycle call from?
No, it's not. It's not a super cycle call. I just think it's going to be prices are going to be very volatile in that 70-90 range, but well above our mid-cycle price call in an equilibrium world. So that's why we're leaning in a little bit and we're constructive kind of throughout the decade and into the next decade.
So let's get to the LNG part. What are you guys doing with LNG that's different from your peers?
So most of the E&P will sell some gas into a liquefaction plant, but we've known about the technology. We've been in the LNG business. We started that business up in Alaska in the 60s, and the first to trade in the Pacific Basin. So we know a lot of it. We have our own proprietary liquefaction technology. So we're leaning in to take advantage of where we think the arbitrage is going to be between Europe and Asia relative to Henry Hub prices. We see Henry Hub prices being low for a long period of time.
Under 2, yeah.
Yeah, natural gas is abundant in North America, but you got to invest in liquefaction. You have to have ships, and you have to have regasification on the other side, and customer relationships, and a commercial organization to manage that. And we have all of that sitting inside our company. So that's a bit what we're unique relative to our E&P peers, with the capability and the ability to take advantage of those arbitrage and really move gas to Europe and to Asia.
Okay, so if we just stay with Europe for a second, that means that you take the natural gas, you freeze it, you ship it you put it on a tanker, you ship it, you put it at, say, Netherlands or Germany, and then they warm it up back into natural gas and use it.
Yes.
I thought that they were going to be all hydrogen, though, and they were going to be all green. Is that not what you see?
Well, I think hydrogen is going to take a long time to develop. I mean, it's going to be a fuel and a transition fuel over the years to come. But as we look at, even with the IRA bill and some of the incentives that are in place, it's going to take a long time to develop those markets today. And even Germany and Europe basically is saying all they want is green hydrogen, which is very expensive. The way hydrogen is going to develop is going to be gray, blue, and then green. And it's going to take a long time to get those markets in place. So in the meantime, gas is going to be really critical.
Gray, blue, and green, just how you get the hydrogen.
Yes.
What power you use to get the hydrogen.
A little inside baseball there.
We like colors. Okay, so to that point, what are you guys doing in the energy transition? Like, are you making big bets? Are you making little bets? How do you see that kind of thing playing out for Conoco?
We're spreading it around a little bit. We're doing things that are have adjacencies to the capabilities that we have as a company. So clearly, for a long time, we've been injecting stuff down into the ground. So CCUS makes a whole lot of sense to us, both to decarbonize sort of the Canadian oil sands that we're a big player in, or in and around our liquefaction facilities that we're building here in the U.S., or even our own operations that we have around the U.S. and really around the world. So CCUS, or carbon capture and underground storage, is something that we're leaning into. We are looking at hydrogen. We have a project in Corpus Christi that we're looking at today that includes sequestration of the CO2. Starts out as a blue, or taking hydrogen from natural gas, injecting the CO2 and selling the hydrogen to customers. And we're aligning ourselves with the customers, similar to how we built the LNG business, 50, 60 years ago, in bringing the customers into the project. And they have to be willing to pay you a fair price over a long term to justify that large infrastructure being built.
How hard is that price to come by right now?
It's pretty hard.
How wide is that spread?
It's still, it's still out of the money, if you will. So it's going to take some work. We have to get technology to come to bear. We have to lower the cost of these facilities. We've got to get customers to sign up for long-term contracts that'll give us a competitive return on the investment that we're making.
Yeah,
so there's still a long ways to go to connect all those pieces.
Like de-risking the demand side, not just the actual build-out infrastructure side.
Yeah.
So I did want to get your take on a main theme here in Houston, which I was not expecting, was the massive build-out in data centers and AI, and the power that's needed, and how the power is not necessarily there yet. Do you have tech executives calling you right now?
Yeah, they are. It's pretty fascinating right now. This AI, machine learning deep language model revolution is going to be huge. And the energy needs to satisfy these data warehouses and all the cloud infrastructure that we have in place and these data warehouses that are needed to power this AI revolution, the energy needs are going to be enormous. And it's going to take it's going to take a bunch of wind, it's going to take a bunch of solar, it's going to take nuclear, it's going to take oil and gas in order to satisfy the energy needs of this growing business, where the U.S. has a huge competitive advantage.
Do you think that that the data centers will plug into the grid, or do you think there'll be sort of direct power? Will they like, hey, well, not you, you're not a power company, but hey, you random power company, will you supply me directly?
No, I think it's going to be a mixture of both. The most things they need 365, 24 hours a day, all the time power. So renewables with battery backups don't necessarily satisfy their baseload needs. So it's going to have to be a combination of power that externally comes in from maybe a renewable source, but they're going to have to be connected to the grid as well. That's the problem that's coming, is the infrastructure, the transmission lines to get the power that the needs that are going to be required are enormous.
Do you think we're going to be able to build all the data centers that everyone says they're going to build?
Well, it's hard to do that math. And somebody, and I think the real question is going to be what's the impact on the energy. I think it's going to be self-confining to itself because of the energy needs and the water needs. These data centers.
Before I let you go, you were one of the few CEOs last year to call the growth in U.S. oil production.
I got a lot of criticism early on.
You did, but you were right. And Macquarie says you could see 14 million barrels of oil a day this year in the U.S. What's your expectation?
Yeah, our models would indicate probably 300,000 to 500,000 barrels a day of growth this year coming. And the growth is starting to moderate. Last year we saw about 800,000, which is what our models would have predicted. So it is starting to moderate a little bit, but still growing. And I think the U.S. will surpass 14 million barrels a day.
This year?
No, not this year,
okay,
but over the next couple of years.
What would be the circumstances where you guys would put more money into the lower 48?
Well, we're pretty balanced. We have a diversified global portfolio. We're putting money in to make sure that we're really focused on returns. We're just focused on making sure that we get the efficiency and the technology deployed, that we're maximizing the returns on the capital that we're investing. We are ramping our capital in the U.S. lower 48. We're ramping in Alaska. We're ramping in Canada. So there's capital coming off in other parts of our portfolio, so we can kind of keep the capital flat across the whole company at about $11 billion, which is what we're spending today. But the lower 48, the unconventionals get the predominance of that capital.
One last question here. Secretary Granholm just spoke. It seemed like there was going to be some relief in the LNG export pause. There's an election coming up. How does politics factor into Ryan Lance?
Not at all. Not a bit.
You're not worried about the export pause?
I'm just kidding.
I'm kidding.
No. It's yeah. I mean, we're concerned. Look, customers are calling us and telling us, hey, what's happening? What does this mean for the long-term future? And what it's doing is it's setting up the problem in 2 or 3 years. So if the pause continues for a period of time, then customers are getting uncertain about what the future stands. And producers of gas are saying, am I going to have an outlet for my gas? So it's leading to sort of lower levels of activity. Current prices driving that as well. And if you continue with a pause and you do that, you're feeding the next cycle that means higher gas prices coming as a result of trying to pause this for too long. So yes, it absolutely has an impact in the market as we think about our plans and the LNG projects that we're trying to build on the Gulf Coast. It's real. And it has an impact. Now, I get what they're trying to do and assess what the U.S. market is going to look like. But you could do that in parallel. You could make these assessments at the same time that you're moving it along. They've chosen to do something different.
Do you think it goes away after November 6th?
I don't know. I hope it does.
Okay.
It needs to.
Hey, Ryan, it's so good to catch up with you. Really appreciate it. Ryan Lance, Chairman and CEO of ConocoPhillips. Guys, back to you.
All right, thanks so much, Alex Steele and Ryan Lance, Chairman and Chief Executive Officer of ConocoPhillips. Vani, what struck me was his forecast for oil prices to be somewhere between $70 to $90 in the near term. Pretty much that's where we are, smack in the middle there, with Brent currently at $87 and WTI at $83. If oil prices continue to stay at these levels, there's going to be that recurring concern that it's going to contribute to inflation again.
Correct, Scarlett. And the other forecast he gave was that natural gas is going to stay below $2 for the foreseeable future. In fact, for a long time, I think was the exact quote. So on the one hand, you have oil potentially offering up some kind of an inflation problem, but natural gas is doing the opposite. So you'd like to think that these things would balance out.
Well, we'll see how that all shakes out. Obviously, the Fed looks at everything ex food and energy, but it always has a way of seeping into real prices later on, right? We've got much more ahead on the close. Keep it right here on Bloomberg. About 3:30 p.m. in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Bonnie Quinn.
And of course, we're looking at beauty products because certainly they've been in the zeitgeist with all the social media uproar. And of course, if you watch the Super Bowl, there was a lot of advertising on a lot of the beauty products.
For sure. You know, when you walk into a Sephora or another one of those kinds of retailers, very difficult not to spend a wad of cash, Scarlett.
As you did recently, right? You were just telling me.
Yes, but I hadn't for a couple of years before that, so I'm good with it. Once in a while, it's good. Plus, they give you points now, so it's almost like you're saving money.
Yes, the rewards, the loyalty programs. All right. Well, e.l.f. Beauty is actually celebrating 20 years in the business, ringing the opening bell at the New York Stock Exchange this morning. If you look at the shares, they've climbed almost 650% since public trading began in 2016. So we welcome now the CEO of e.l.f. Beauty, Tarang Amin, joining us here in New York to talk a little bit more about the path that the company has taken. Tarang, good to see you here.
Great to see you.
So we mentioned social media. How has the explosion of social media contributed to increased demand of cosmetics? Can you draw a straight line from the multitude of user-generated videos, user-created videos to increase sales?
We absolutely can. I mean, I think the great thing about our category is it's the perfect category to express yourself, to be able to empower others. And we feel social media is a great platform for that. And it used to be where you had to go through celebrities or perhaps influencers to get the word out on product. We now find, particularly with our unique ability of bringing prestige quality at these extraordinary prices, as soon as we launch what we call our holy grails, there's like 1,000 TikTok videos on it the next day in terms of consumers really discovering it and being able to let others know. So it definitely makes a big impact.
Our makeup artists were comparing e.l.f. Beauty to kind of like the H&M of the beauty industry, like you're quick to move on these hot trends. You mentioned TikTok. If TikTok is banned, how quickly can you move your marketing spend on that platform to somewhere else? And would it necessarily be to like a Snapchat or to an Instagram? Would it be minutes, days, months?
Well, no, we live where our community lives. So we basically got on TikTok because we saw a lot of Gen Z on TikTok. If something happened to TikTok, we would follow where our community is. We're on like 17 different social platforms. We have strength across the board. Not only TikTok, but we have our own channel on Twitch. We have the #1 branded experience on Roblox. We're strong on Instagram, Facebook. There's a number of different, Reels is another one. So while TikTok's been great for beauty as a whole, I would say we would follow where our consumers are.
How do you sell, a camo liquid blush for $7 when we've seen inflation hitting everything, every kind of raw material? Is your packaging getting smaller? How are you dealing with it?
No, well, that's actually the core to our success. I mean, our company was founded 20 years ago with this bold vision of having premium quality, these accessible price points, and everything we do is really engineered against really bringing that level of quality at much better prices. And a lot of it's reflected in our cost structure. We don't have sales associates, a lot of the costs that a lot of other companies have, that allows us to really be able to have an everyday great price, and that's really what delights our community.
Well, of course, but everybody says that, right? And you do still need to go through the manufacturing process and the advertising process and so on. So where are you going to cut back on that, if we continue to see this kind of environment where the consumers may be getting a little bit squeezed and inflation is not coming down anytime soon?
Yeah, well, I think, one of the great things for us, I've been CEO for 10 years. In that time, I think our gross margins have gone from about 45% to over 70%. And if you look at how we've done that, we haven't done that through traditional pricing. It's really been through innovation mix. So as we introduce these products, I got a great example recently. We introduced our lip oils. There's a prestige lip oil that costs $40. We're able to introduce our lip oils at $8. And we get lots of testimonials that consumers actually think it's better than the prestige item. So it's really built into our entire system, and it's what really sets us apart. That value proposition, our powerhouse innovation, and our marketing engine all work together.
We've noticed that more young people, including 8, 9, 10-year-old girls, are starting to buy skincare products. What are the opportunities and risks associated with the increased interest from this particular demographic?
Well, I think there's strong interest in skincare across all demographics, and that includes younger consumers. And on the whole, we think it's a good thing. I mean, being able to take care of your skin, even at a younger age, in terms of cleansing, moisturizing, certainly SPF protection from the sun is good at really any age. And so we feel more and more skincare usage. We're well situated there. We have two of the fastest growing skincare brands in e.l.f. Skin and Naturium, our clinically effective biocompatible skincare brand. So we feel we're in a great spot in terms of continue to meet that interest.
Well, SPF is one thing, but retinol may be something else. For instance, is e.l.f. telling consumers not to use certain products, that it's not appropriate for their age group?
Well, I think that's the whole key for us. When we acquired Naturium, a big part of acquiring Naturium, it's clinically effective but biocompatible. I think some skincare brands go overboard in terms of telling people to use retinol or higher percentages when that actually isn't good for your skin. So our focus is really what is good for your skin. It's one of the reasons why, if you look at our superpowers, we're premium quality, extraordinary prices, broad appeal, but clean, vegan, cruelty-free, and the only beauty company that's fair trade certified.
Do you break out, I mean, you must internally, what percentage of your sales is by tweens and by teens?
Well, we're the #1 brand amongst Gen Z. We have like a 29% mind share amongst Gen Z. I think the next highest brand's about 13%. But the great news for us is we've been attracting other audiences. So
but what percentage of your sales is Gen Z?
I don't think we've disclosed that, other than we're #1 amongst Gen Z. But the great news for us is it's pretty broad, is where I was getting to.
Yeah.
We have quite a bit in front of millennials, Gen X, Latinx. So it's a pretty broad platform.
What's the next growth area for you then?
Yeah, well, we have 3 different growth areas. I'd say we're #1. We're now the #3 color cosmetics brand in the US. Yet if you look at Target, our longest standing national retailer, we're their #1 brand. In the last 4 weeks, we accounted for 23% of their entire category sales. So we feel we can double our market share in color cosmetics. Skincare is a huge opportunity, as we talked.
Right.
And we're still in early days with international. And so we're seeing strong growth across all of them.
You know, Vani mentioned earlier about consumers maybe cutting back a little bit. I want to ask you about the lipstick index, the idea that affordable luxuries like cosmetics see a sales bump when overall consumer spending slows down. Do you see evidence of that right now?
You know, for us, we've had strong growth in good economies and bad economies. When we just delivered our 20th consecutive quarter of net sales growth, averaging at least 20% growth.
Yeah, but a little bit of a bump from the lipstick index?
I wouldn't say so. I mean, if you look at our last quarter, our entire year has been a pretty strong year as we take a look at what we're seeing. So, I mean, I think a lot of that speaks, again, perhaps we're different to our value proposition and how great it is, but we've done equally well in really good economies as well.
All right. Well, looking forward to seeing you again in 20 years' time, if not before. Congratulations on your 20 years. That is Tarang Amin, CEO of e.l.f. Beauty. And of course, Scarlett, we spoke a little bit about my makeup buying habits, and I'm sure you tend to like
I actually was at a Walgreens on vacation because I forgot to bring some stuff, and I went in there and I ended up buying some e.l.f. Beauty products and kind of walked away surprised at the price point. So I'm so glad that you asked about the inflation question, because I was thinking, how can this eyeliner be only $3? But I think also there was very little of it as well, so I probably used it all up that week.
Possibly, yeah. I mean, it is very difficult to know, isn't it? That's going to be the age-old question, you know, is a $40 product really worth the $40?
But you know, if you're a teenager or a tween and you're just looking to experiment, maybe that's all you need, right?
Exactly. Well, coming up, shares of Nvidia higher today as investors await the semiconductors company's annual artificial intelligence conference. It's today's stock of the hour. Up next, this is The Close on Bloomberg.
Wednesday, the Fed decides.
They are scared stiff of getting this wrong.
The markets are just primed for the big green light.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We want to see more good data.
We're still seeing sticky inflation.
How dependable is the data?
How long does it need to be good? 6, 7, 8 months?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
It It is time now for our stock of the hour, and today it is shares of Nvidia. They are higher, as they have been for most of this year, as investors eagerly await the company's GTC conference. Abigail Doolittle is here now with more. Some people are calling this, what, the Woodstock of AI?
Yeah, I love it. The Woodstock of AI. So it's really a festival for the more than or roughly 300,000 developers, usually people that you think of as being pretty nerdy, engineers and that sort of thing. But this is really a cult-like event at this point. And what's so interesting to me, the first time, because the headline, if we keep the analogy, Jensen Huang spoke in 2009, 1,000 people. I think it was last year or the year before. 22 million people tuned in for his speech alone. So probably even more. But in terms of the actual attendees, either in real life or virtually, 300,000 developers. Now, relative to his headline speech, it's going to be all about the pipeline plus the competition. But I think that what a lot of people are wanting to hear about is the debut of what's called the B1000. This is the latest generation of AI accelerators. And the rumor is, and I'm a little bit out of my field here because this is pretty technical, but it's expected to be the first what's called a multi-die product, basically larger tech designs put into really small, they're called chiplets. Sounds really kind of cute in a way. Probably not so cute, though, to the people who are spending millions and millions of dollars for them, but they're hard to get. The thought is that even if they do announce that this is the case, are they going to be able to supply enough of these B1000s to meet supply?
So a new product, but then there'll also need to be more to satisfy investors, right, Abigail? Because the stock has run up quite a bit.
It's incredible, Vonnie. This year, this stock is basically doubled. I mean, I think it went from 400, 450 to almost 1,000. It's come back in a little bit. That is a parabolic uptrend if I've ever seen one. And when you pair it with the RSI, which is actually no longer in overbought territory, it tells you that these new highs, the recent highs, had been made on less bullish momentum. That's not a positive sign. So it tells you that probably some consolidation is ahead. Will it be around this event? We don't know that. Could it be something macro like the Fed? Potentially. But at some point, yes, these shares will probably give some of that back.
Yeah, Nvidia is the poster child right now of AI demand and, of course, of certainly profiting off of it. But you mentioned another stock that has really gotten a lot of attention recently, which is super microcomputers. I mean, today it's lower, but the run it's been on puts Nvidia like in the dust.
Yeah, you can barely even see Nvidia's move up relative to the 1,200% one-year move that super microcomputer has made. Now, I'm a stock person, as you know. Up until a few weeks ago, I had never even heard of this company. But apparently, Nvidia AI chips get put into their servers, and so that's the big connection. Plus, today did start officially trading in the S&P 500, as you mentioned, the stock on the day down about 7%. A little bit of sell the news, but yeah, anything AI, it's up.
It didn't start out like that today, though, I have to say. It was up almost 8%. It was the best performer in the S&P 500.
SMCI was?
Yes, it was.
Really?
At the very
Wow.
early start of
So
the day.
this must be an interesting chart.
Started to shoot down, and so that was an amount of volatility. But that's the kind of market we've seen this year, right?
Yeah, it looks like it's going to fill a gap here, actually.
All right, Abigail Doolittle, thank you so much. Do you think, by the way, that Jensen Huang's going to be in his trademark leather jacket?
Absolutely. I think he probably wears it in bed, yeah.
It's like Steve Jobs with the black turtleneck, right?
Yeah.
It's just the look that he's adopted, and that's his thing.
Yeah, exactly.
That's his call sign. All right, coming up, we're going to count you down to the closing bells. Uma Moriarity is going to be joining us. She's the Senior Investment Strategist at Centersquare Investment Management. This is The Close on Bloomberg. This is the countdown to the close. I'm Scarlett Fu alongside Vonnie Quinn. Vonnie, we have a rally on our hands here in equities, a bit of a turnaround from the last couple of days.
Yeah, we were wondering on Friday if it was a rotational change or it was just a sell-off. It was, of course, triple witching on Friday. Well, it looks like it was just a bit of a sell-off because we've resumed the risk-on sentiment today with the Nasdaq up 1.1% right now, the Nasdaq 100 and the Nasdaq itself up 1%. As you can see, the Magnificent 7 index is up more than 2%. Plenty of stocks contributing there, including Nvidia, as we await that conference that's starting in about 10 minutes with that speech from Jensen Huang. But then, of course, you have to look at yields. The two-year yield, so the yield that's probably the most nuanced by what the Federal Reserve says, is at its highest since last December. It's at 2.72 and change at this point. It was at 2.74 and change a little while ago. And then oil, well, we're just at $87 a barrel there on Brent. And as you can see, the yen, even though we probably know what we're going to hear from the Bank of Japan a little later on, thanks to the Nikkei report, it's trading at 149.17, Scarlett.
All right, so let's try to make sense of all of that action and bring bring in now Uma Moriarity, Senior Investment Strategist and Global ESG Lead over at Centersquare Investment Management. Uma, it's good to speak with you. As Vani mentioned, we're getting a disconnect here when you look at bonds and stocks and how they're reacting to this potential rethink of how the Fed moves forward with rate cuts, the cadence and the timing and all that. If there is a rethink, why are stocks moving up and why are bonds moving down? Why are bonds under pressure?
Thanks. It's great to be here. I think what's really been on focus, like you mentioned, what's coming out of this Fed meeting, and there is a lot of different data that you could point to that is going to provide a bull case scenario, a bear case scenario. I think people are able to kind of pick and choose what they want to look at. At Centersquare here, we are real estate investors, and as much as there is this focus on what the Fed might be doing, we're really focused on those long-term yields, that 10-year Treasury yield, and we've seen that kind of settle out here in the 4+% range, and that's really what we're looking at as we think about what's happening across the real estate market.
So where is it going, Uma?
In terms of that 10-year yield, we think that the 10-year yield is kind of settling out here. We think it's going to be here for the foreseeable future. And what that really means from a real estate perspective is that we have to have a bit of a repricing happen in the private markets, but we have seen that repricing already happen across the listed real estate market. We have some really interesting opportunities now across the REIT space. When you were just talking about things like Nvidia and the servers that need to house these chips, all of that is housed in data centers. Data centers are real estate opportunities, and there's some really interesting opportunities to play the AI boom through that space.
Okay, so data centers is one way to do it, but if we stick on the housing market overall, where do you want to be in terms of direct exposure to housing? Do you want to be in home builders, or perhaps do you want to be more tangentially tied through the likes of Home Depot or Lowe's?
In terms of the housing market, we are a little bit more bullish on rental residential opportunities. I think something to really pay attention to is the fact that you've continued to see a really frozen housing market. We are seeing early signs of that thawing out, but housing still remains really unaffordable for a lot of people as they're trying to purchase homes. And we think that's going to just create renters for a lot longer across the United States. And that really has an outsized opportunity for rental residential opportunities, whether it be apartments, whether it be single family rental types of opportunities as well. And that's an area that we're pretty bullish on here at Centersquare.
So where are you putting your money to work when you say, you're bullish and that this is all you're concentrated on? Where are you actually putting the money down?
Across the residential space, we are bullish on apartment companies, apartment REITs that have exposure, especially across the coastal markets. These markets, we're seeing some really great recovery, especially in areas like the Bay Area and Seattle, where you have been seeing a bit of a lag in terms of fundamentals recovering after COVID. But you are starting to see some life coming into these markets, especially in terms of the Bay Area, right? You're starting to see some momentum grow here from the AI perspective as tech companies start to ramp back up here. And so we're seeing some really great demand fundamentals in these kind of coastal markets. At the same time, really no supply coming into these markets. And so providing for a pretty good fundamental backdrop for rental residential landlords in these markets.
Okay, great stuff on the housing market and how to think about it. And you mentioned those REITs. I want to get your thoughts also on just the AI, the conference that Nvidia will be hosting in about 5 minutes' time. When you listen to someone like Jensen Huang talk and you think through the ecosystem that benefits from Nvidia getting so much demand that it can't even begin to fulfill the orders, is it too late to jump in on some of those secondary names?
Absolutely not. I think AI here is in the very, very early innings of how it's going to play out. We really aren't really even sure, right? Where is this going to go? But this is really just the beginning of that infrastructure really getting built out. I mean, if you think about some of the secondary impacts on things like drug development, for example, right here across the Bay Area, a really strong ecosystem in terms of life sciences. We're going to have hopefully some great strides, and we're going to make some great strides in terms of drug discovery, what that means for the life sciences space here. And it's just, I think, one of the many dominoes that are going to start falling as AI becomes a bit more prominent in terms of driving business in general across all industries.
So Uma, give us some more food for thought. You say data center, real estate, also apartments on coasts. What else are you doing that's different?
I think something that's really interesting to think about these days is retail real estate. We have been at Centersquare investors in what we call essential service retail here for several years. And when I say essential service retail, I mean, think about your shopping centers in suburban areas without any anchors, but this is where you would find your dentist, your hair salon, nail salon, food and beverage, things like that, areas where you have to actually physically go to that retail real estate to consume that real estate. And in the last 10 plus years, we haven't built any new retail. At the same time, we've seen certain markets, especially across the Southeast and Southwest US, get a lot of population growth. And so you've seen a really strong level of demand. In the same time, you've had effectively no supply. And so that's another area where we've seen kind of this silent megatrend where retail has become a really interesting opportunity. And it's gaining the attraction of a lot of institutional investors these days, which is a little bit of a different story, right, compared to maybe what retail real estate was from a sentiment perspective just a few years ago.
All right. Uma, really appreciate your joining us. Uma Moriarity is Senior Investment Strategist and Global ESG Lead over at Centersquare Investment Management. And of course, retail is something we keep a close eye on here, as well as, of course, the AI space and not to mention housing. These are big, big themes that are starting to see maybe a little bit of a change. And maybe we're at an inflection point, certainly when it comes to housing as well.
We'll have to see. We definitely saw the National Association of Home Builders out with some better sentiment this morning.
Yeah.
I mean, it's just a few points, but it all leads somewhere. And we're obviously going to get more housing data tomorrow, and then we'll get hear more from the Fed. And if Uma is to be believed, then rates are coming down.
Rates are coming down. Okay, well, right now we have stocks giving up a little bit of their advance, meaning they're paring some of their gains. The S&P up by 0.6%, but as you mentioned earlier, Vani, big tech is certainly leading the way with the Nasdaq Composite up by 0.8%. The Russell 2000, we're not seeing that broadening of the advance. It is down 0.7%. Let's get you closer to the closing bell with full market coverage right here on Bloomberg as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Vonnie Quinn here with you, counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast, Carol Massar and Tim Stanovic. And welcome, of course, to our Bloomberg Television, Bloomberg Radio, and YouTube audiences as we look through the trading day. And right now, the trading day feels like we are just waiting with bated breath for the Fed for this Nvidia conference.
Yeah, right. There's so many big things going on, right? We'll look for some headlines out of Nvidia. But having said that, we have seen some selling, I feel like, in these last few minutes of trading when it comes to the equity universe. And we're pretty much at our lows of the session. So we're below a 1% gain on the NASDAQ 100. And I think one of the things that's been sticky all day, Tim, is what we've seen along the rate curve.
Yeah, I was just going to say, the 2-year Treasury note, we just talked about this. Yields climbing to the highest level this year. The 2-year rose 2 basis points from Friday's level. We see the yield on the 5-year note at its highest going all the way back to November 28th. So we're waiting, but the bond market is sending a message about what they think the Fed is going to do.
Higher for longer?
I've heard that before, Carol. Data dependent?
Yeah.
Well, we've so much news, though, coming up, right? So we have plenty of news coming from the Nvidia conference. At least investors hope to think so. And then, of course, we also have the Bank of Japan later on, Scarlett.
Yeah, I'm actually setting up my monitor so that I can check as soon as the Nvidia headlines cross. But the BOJ announcement feels like they've been inching towards that for the last couple of weeks. Certainly, they've been priming the market for this possibility.
Yeah, let's not forget, right? We're looking at global central banks, the cumulative activity of what central bankers, Scarlett, do around the globe and what that has on the global financial markets.
Yeah, absolutely. All right, we are getting you closer to the closing bells. And Carol, as Carol mentioned, certainly losing some momentum heading into the close here with the S&P 500 only up by 0.2%. The Dow Industrial is gaining about 0.2%. That's where it looks like it's going to settle. And the Nasdaq Composite, the clear winner here, up by 0.8%. The Russell 2000, we should mention, losing ground, losing 0.7%.
All right, good to know. There's your big picture. And I'm going to stay with the big picture and the big caps, if you will. S&P 500, if I look at the individual members, Vonnie, you see 307 to the upside in today's trade. So some fairly broad-based buying, even though a little bit of selling into the close here. 194 names in the S&P 500 losing ground, 2 unchanged.
And I think what's obvious from the IMAP of the S&P 500, Carol, is that it's the more risk-on sectors that are doing so well. So you have information technology leading the pack. But, most sectors are in the green, except for the very defensive healthcare, real estate, industrials, and earlier the financials, although they picked up a little bit of steam towards the end of the session as well.
All right, guys, let's go to some of the individual gainers. And Apple, WOA, atop that list. We know there's been a lot of pressure under Apple shares, although at their highs today, they were up about 3%, finishing the day with only a 0.6% gain. That name, of course, though, certainly a standout earlier, but nonetheless gaining some ground here today, along with Alphabet, Google, I want to throw that into the mix because you have Alphabet among the top gainers in the NASDAQ 100 and the S&P 500 today. That name up, more than 6% in today's session. What's interesting, actually at the close, forgive me, about 4.5%. But what's interesting, we know the big story, right? It's been among our most read on the Bloomberg today. Our Mark Gurman, an exclusive, breaking it. And this whole idea that Apple in talks to really build Google's Gemini artificial intelligence engine into its iPhone, according to those familiar. So we're talking about maybe some kind of big agreement once again between two companies that have been working together for a long time when it comes to search. So nonetheless, this caught our attention and really gave a lift, overall lift, certainly to the tech trade in the Monday session.
You think they're friends again after being frenemies? Is that what's happening?
Well, actually, they've been friends for a long time on search, and they've been collaborating for a long time.
Yeah, they pay Alphabet billions of dollars a year.
But not on Maps, right?
Search.
They went their own way on Maps.
Yeah, no, but it's interesting.
Frenemies is a good way to describe it.
I find the tech universe really interesting, right? Like these companies that compete, and yet they often sometimes find they need each other. But anyway, those two names definitely stand out. I did want to mention Tesla, if I may, before we move along. Number one gainer in the S&P 500. This one was up more than 6%. Forgive me as I was reading through my numbers. Out on X today, Elon Musk saying prices in the U.S. will increase by $1,000 for all Model Y cars. That's starting April 1st. We talked about it, some analysts weighing in on this. Maybe it's just an inventory thing, kind of working through some of those production levels. And Deutsche is saying that Tesla's preview of future price increases as an attempt to boost sales this month rather than a sign of solid demand, so something to keep in mind.
Increasing prices to boost sales. I haven't seen that one before.
I don't know.
Hey, it's good for margins. It's good for margins. I want to talk about some of the decliners. Supermicrocomputer, you might remember this was added to the S&P 500 end of day Friday. Today was the first day it was included in the S&P 500. On a percentage basis, the worst performer on the day, down more than 6% today. I do want to give some perspective, though. Supermicrocomputer shares are up by more than 250%.
How much are they up this year?
250% just so far this year. But still, I mean, it's notable that on the first day in the S&P 500, they're down. Worst performer. Abbott Labs shares falling today. At last check by close to about 3%. The stock fell on Friday close to 3% as well. That was in sympathy with Reckitt Benckiser, which sank following a lawsuit award. Analysts back on Friday did say that Abbott's sell-off is overdone. So it is notable that we're still seeing some selling in today's session after that news on a Friday. And here's a really interesting one. Fisker, speaking of EVs, the company is pausing production for the next 6 weeks as the EV maker looks to rein in inventory and avoid possibly having to file for bankruptcy. Shares fell today by another 15.5%. We should note the company did not make a required interest payment of about $8.4 million last week on its unsecured convertible notes that are due in 2026. So that certainly prompted some selling by investors. That was a regulatory filing that we got today. Fisker did warn that it may not be able to meet obligations to service its debt and could, quote, need to seek protection under applicable bankruptcy laws. This was an $8 billion company back in 2021. Now the market cap is down to about $85 million. Wow. Yeah, quite a sell-off that we've seen.
Shadow of its former self, really, when it comes down to it. All right, let's take a look at what happened in the yield space. We had declines in Treasury prices, not huge declines, and so therefore the move higher in yields is fairly small. But we're at some pretty key levels here. The two-year yield at the highest level this year. As you know, traders betting on fewer Fed cuts this year. The big question is whether policymakers themselves pencil in fewer than 3 cuts this year. For the 10-year yield, approaching a key technical level of 4.35%. We're at a 3-week high there. Mike Wilson says 4.35%, Mike Wilson of Morgan Stanley, is a level that may disrupt the stock rally. It hasn't really yet, but we're getting closer to that point.
All right, guys, don't cheat, but the most read story in the past 8 hours on the Bloomberg, like here we are, Fed week, the Apple Google news, you've got the 2-year note at a significant level. There's a lot going on. Care to guess?
It has to do with a certain personality.
Good guess.
Yeah, we're kind of living in his world, aren't we? Elon Musk. This story is the most read on the Bloomberg terminal, and it has to do with his prescribed use of ketamine, and he says it alleviates periods of low moods, and is in the best interest of investors in Tesla and the other companies he runs. Like, you know, that was it about a month or so ago that Wall Street Journal came out with the story about some that were maybe concerned about investors in these companies that might be concerned about his drug use.
Okay, so he did give this interview on Don Lemon's new show that's on YouTube, also actually still on X, even though there was the whole contract conversation that we saw last week. Here's what Elon Musk said. What matters is execution. From an investor standpoint, if there's something I'm taking, I should keep taking it. He did say that he takes the drug as prescribed periodically to treat what he described as, quote, chemical tides that lead to depression-like symptoms.
Yeah, I mean, it's definitely pertinent information, right? It should be out there and shareholders have the right to know, just like, our employer would maybe perhaps have the right to know. I'm not quite sure how, the law works in the United States.
Just another interesting chapter, right? In Elon's world.
I think maybe there are questions about security clearance, too, because of his involvement.
Stuff.
Yeah, because of, as a government contractor with SpaceX. But he said he wasn't concerned about that.
I don't think he doesn't tend to be concerned about a lot of these things, but maybe they need to add another chapter to Walter Isaacson's book about Elon Musk when it comes down to it. The other story, Carol, that I thought was really interesting was about how budget hotels in rural Texas are jacking up their prices, asking for $1,000 because it's in an area where you can really get a good view of the eclipse.
We are all a good study of supply and demand, right? So that's where you want to go to see it. Like, I totally get it, right? That these guys are going to charge more because they can.
Okay, I have good news and bad news about the eclipse. Okay, I think we're all going to be on air when the eclipse happens here in New York.
Is that good or bad?
That's the bad news.
Okay.
So we'll be able to see it. The good news is for people who are in New York and don't want to travel to Texas, Vani will still see 90% coverage for the eclipse from this area. So it's actually a pretty good area to watch it if it's not cloudy. That's what I'll say.
You can actually buy a seat on an airplane, right? Delta is doing an actual eclipse flight. They're sold out, that particular one, but you could actually be in the air when it goes completely dark. And who wouldn't want to do that?
That's the way to do it, right? That would be really cool.
What if your flight's delayed? You do that? You're like looking forward to it. You plan it out. You get the tickets.
Then you got to watch it on the TV at the airport, with everyone else.
It could happen.
No ketamine needed.
Just wear your glasses.
Yeah, exactly,
True.
right? All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
All right, we've got full coverage of Nvidia's GTC conference taking place. Highlights from the chip giant's CEO Jensen Huang, the keynote speech. That's up next. This is The Close on Bloomberg. Welcome back to The Close. I'm Scarlett Fu with Vonnie Quinn. As we embark on this momentous week with a ton of central bank decisions due out, we have stocks up and bonds down. The S&P 500 closing off its highs, gaining 0.2%. But we did see declines in treasuries in the 2-year and in the 10-year. Not massive moves here. The 2-year barely changed, but it is at its highest level so far this year. The 10-year yield at a 3-week high, and in fact, approaching the key technical level of 4.35%, which according to Mike Wilson over at Morgan Stanley, maybe a level that disrupts the equity rally. We're not there yet, but we're certainly keeping an eye on that. And Bitcoin losing ground for a change, off by 1.7%. This is actually the only time that, it's only gained once in the last 5 days. So it's been a little bit of a mini trend here for Bitcoin. We'll continue to keep an eye on that one. In terms of equity movers, individual names, PepsiCo, one of the big gainers here, up 4% on the day. Morgan Stanley upgraded the beverage and snack company to overweight, saying that organic sales growth is about to clearly bottom in the first quarter, and they see a powerful inflection in the second half for the company. Alphabet up by 4.4%, powering the big tech companies. Bloomberg has learned that Alphabet is in talks with Apple to build Google's Gemini AI engine into the iPhone. Before today, Alphabet was the third worst performer among Magnificent Seven stocks this year. It was only up 1%. That was before today's advance. Among the decliners, Supermicro Computer off by 6.4%. This is the server maker, falling in its first day of trading as a member of the S&P 500. Of course, even with today's decline, the stock is up about 260% so far this year, thanks to its status as the newest AI darling, its ties to Nvidia and to AI overall. And CareMax losing about 24% so far today. One of the worst performers in the Russell 2000 after it failed to provide any 2024 guidance. The medical services provider says that its lenders agreed to be more flexible with their credit lines to provide more flexibility as it moves forward. And it is exploring strategic options, according to CareMax, across its businesses to generate further liquidity. Fonnie?
Scarlett, thank you. Well, I do want to mention that Jensen Huang has taken the stage at that conference. We'll be bringing you any headlines from that we get. Meantime, as Scarlett mentioned, Bloomberg has learned that Apple is in talks to build Google's Gemini artificial intelligence engine into the iPhone. Let's bring in the reporter who broke that story, and that's Bloomberg's Mark Gurman. So, Mark, it's obviously a win for Google if this does in fact take place. Does it mean that Apple will now throw in the towel on its own generative AI projects?
Yeah, thank you for having me. I don't think it means that. I think Apple is going to have a slew of its own generative AI tools and services and applications coming as early as this year with iOS 18. Apple's are going to be built into the phone themselves, though. It's going to be run all entirely on device. But you also want some generative AI built into the cloud. People want applications like Gemini, like Microsoft Copilot, like OpenAI's ChatGPT. And as of now, the best way for Apple to do that is to work with a partner. And so they've landed on Google as at least one partner that they're discussing this actively with. They have recently held talks with OpenAI, but the Google talks are active, whereas the OpenAI talks are not active as of this moment. Obviously, the two could come back together on a deal later if this Google deal falls apart, or Apple could choose to work with both. But right now, the eyes are on the Apple and Google talks. This would see Gemini run on the iPhone. They're still working out commercial terms. They're still working out how the technology will be implemented exactly. But what we know right now is they're trying to iron that all out.
What does this mean for Apple's own ambitions to build up its own AI capability without partnering with anyone?
Yeah, I certainly think that it shows that Apple is not as ahead as everyone else in terms of cloud-based Gen AI that runs on data centers and servers, basically everything that has been driving up Nvidia's stock price the last several months, right? That is what Google is focused on, OpenAI is focused on, this generative AI where you can plug in a short prompt and get an image created for you from the cloud almost instantaneously. Apple's focused on more applied artificial intelligence into individual software and applications and features on the iPhone running on device, very privacy centric. But for Apple to really compete, you really need to see them do both. And so Apple's going to handle what they're good at, which is the on-device AI woven throughout the operating system. But you also are going to want a call out to a third-party generative AI partner like a Google Gemini in order to do those fun things that people are normally using ChatGPT and Google Gemini and Microsoft Copilot right now, the stuff that's made people so interested in artificial intelligence lately.
Absolutely. Mark Gurman, thank you so much. And great job on the scoop. Mark Gurman, of course, covering Apple for us on this idea that Apple is in talks with Alphabet about incorporating Gemini into its iPhones. Nothing is set for sure, but these are pending discussions. Let's stick with AI here because NVIDIA's GTC conference is currently underway. The CEO of NVIDIA, Jensen Huang, delivering a keynote speech to kick off the festivities. We want to get some more context about this from D.A. Davidson senior tech analyst Gil Luria. Gil, this is something NVIDIA does regularly, but people are paying attention in a way they never did before. And I think a lot of people outside the tech world, the tech hardware world, are paying attention. How much of the commentary that Jensen Huang is going to be giving is really going to focus on tech and specs of the technology?
Well, I think first and foremost, this is a really big victory lap for Mr. Huang and NVIDIA. He has built a remarkable company that's leading the way in terms of accelerated computing and has allowed us to think about new tools and new applications that were impossible before that. Combined with Mr. Altman at OpenAI and what he's been able to do there, and Mr. Nadella in commercializing this technology, those three have led the way. And today's NVIDIA's day to celebrate that. They just had a really compelling video with a lot of the applications that are coming out. They're really trying to make the technology vivid for developers and non-developers so they can see where this is headed and why this technology is so important.
Okay, good points. And Vani, for the record, there he is in his leather jacket. So Jensen Huang sticks to his wardrobe. Gil, who is Jensen Huang speaking to? I know he's speaking to developers, but broadly speaking, is he addressing policymakers? Is he addressing retail investors? Is he addressing potential customers?
I'd probably start with that order. He's addressing customers. He wants other technology companies, other software companies to build more tools, to look at the architecture behind NVIDIA GPUs and the software and the packaging around it and build new exciting tools. first and foremost those customers and their developers. But obviously, he understands that investors are very much focused on Nvidia right now. No stock has done as well in recent memory, but not at this scale. He wants to make sure they get the answers they want, that they feel like the growth isn't going to stop this year. It's going to continue into next year and the year after that. And the only way that happens is if new solutions come to the market using his technology.
Gil, you sound so congratulatory of Nvidia, and yet, you're one of just 7 analysts among 67 that has a neutral rating, and you're the 4th from the bottom in terms of price target. You think it's 20% overvalued here. Is that still the case?
I have to live with a lot of cognitive dissonance these days. For as much as I appreciate the company and what it's doing, I feel like there's a mountain of evidence that they will not be this big of a company in a couple of years. They're big customers. They literally have a handful of customers that are the 2/3 of the spend on Nvidia. And those customers are telling you that this year they're going to buy a lot more. This is going to be a great year for Nvidia. But if you listen carefully, you also are hearing that that's probably not going to continue into 2025 and 2026. So I have to live with a world where I'm very excited about what they're doing this year and realizing that estimates for 2026 may be twice as high as where they end up being.
Wow. Well, are your models telling you that Nvidia is going to have to bring down its prices for licensing, or that other companies will step up and be active competitors?
Well, so the essence of this is that their customers want to, A, diversify, not just buy from Nvidia, B, are building their own chips to do this, and C, developing a technology that will mean they don't need quite this much compute. Microsoft just came out with a research paper that said they think there's a new technology in generative AI called 1-bit LLMs that can do the same computation with 1/10 of the resources and 1/70th of the energy. Then it could work on CPUs, it could work on custom chips. So their customers are telling us that they don't want to be this reliant on Nvidia medium and long term, even if they're buying a whole lot of GPUs this year.
During earnings season, a lot of tech companies were including in their earnings release whatever partnerships or whatever cooperation they had struck with Nvidia. How do you, as an analyst, recommend that investors distinguish or make the distinction between fluff announcements and actual concrete beneficial partnerships?
That's a very important point, is that these are not Nvidia customers, at least not yet. These companies have been talking about cooperation with Nvidia, just means they're looking at the technology and trying to understand how they use it. And then at some point renting GPU space from either Microsoft Azure or Amazon AWS. But they're not actually Nvidia customers, at least not quite yet. And so you got to be really careful. There's a lot of partnership announcement. They just showed a whole video of these amazing applications, and they put Adobe's name and Amazon and Microsoft and other companies' names on the screen. But these are just companies developing generative AI applications. They're not necessarily all Nvidia customers.
Got it. D.A. Davidson's Gil Luria, thank you so much for giving us your take here on Nvidia's conference, developers conference right now. Let's actually listen in as the CEO, Jensen Huang, is speaking live.
You multiply the two of them together, approximately 30, 40, 50 billion, quadrillion floating point operations per second. Now we just have to do some CO math right now. Just hang with me. So you have 30 billion quadrillion. A quadrillion is like a peta.
Wednesday, the Fed decides.
They are scared stiff of getting this wrong.
The markets are just primed for the big green light.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We want to see more good data.
We're still seeing sticky inflation.
How dependable is the data?
How long does it need to be good? 6, 7, 8 months?
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
It's time now for the top three. Every day at this time, we take a deep dive into the folks at the center of some of the day's most talked about stories. And first up, Vonnie, is Stephanie Cohen. This is the veteran Goldman Sachs executive. She is leaving the firm to join Cloudflare as its chief strategy officer. This is the latest loss in the dwindling ranks of senior women at Goldman Sachs. She'd been there for 25 years and had headed up the consumer bank, which we know Goldman has steered away from.
Yeah, I mean, it's going to be a fascinating job heading up Cloudflare, but I do want to point out that Lydia Moynihan in the Post did have something along the lines of the story about a year ago. She said that when Cohen went on leave, that it might be permanent, according to her sources, that she might actually be coming back. So, you know, there was something in the water. It looked like perhaps she needed a new challenge, or there wasn't enough happening with the consumer bank.
Yeah, the pivot away from consumer banking, certainly not a good sign for her at the time. All right, who else are we watching?
Well, I was watching Elon Musk, as you know, you can't help but watch these days every now and then. Obviously addressing his prescribed use of ketamine in an interview with Don Lemon. Let's have a listen.
From a standpoint of Wall Street, what matters is execution. So from an investor standpoint, if there is something I'm taking, I should keep taking it.
Really, I don't know. At what point do you draw the line with HIPAA laws and with, the fiduciary duty to disclose exactly everything that's going on, with you? I guess in this case, it is good for investors and shareholders and board members to know, his views. And we obviously know that there had been reports that some shareholders and some investors were a little bit concerned about his drug use.
Yeah, it's a really good point. His emphasis on this idea that Wall Street, what matters is execution, that may be the case, but certainly how you get there is of great concern, especially for a personality-driven company like Tesla and SpaceX.
Well, it's a little scary as well, the idea that, just because you've been doing something and it's been working, although according to what metric, that you should continue doing it. I mean, they were downing the price of Teslas and now they're upping them.
Yeah, that's a good point.
I don't know.
All right, the third person we're watching is Gary Gensler, because the SEC under Mr. Gensler is penalizing two money managers for what it says were bogus claims about their use of AI. And I suspect that this is going to be the first in many, many of these investigations.
Yeah, exactly. I mean, you can just imagine he's, dealt with Bitcoin, and AI is his next frontier. I'm not sure, though. I mean, I think that he'll be dealing with Bitcoin as well, for a little while longer.
Yeah, Bitcoin and AI together. That'll be a twofer for Gary Gensler and the SEC. Coming up next, we're going to talk about SAIC with the CEO, Toni Townes-Whitley. This is The Close on Bloomberg. All right, this is NVIDIA's Developers Day, and of course, Jensen Huang, the CEO, is taking center stage. He's really the man of the hour, the man of the year, really, when it comes down to it. And he's going to resume his comments. Let's listen in to what he's saying on stage.
Here's the if you will, the heart of the Blackwell system. And this inside the company is not called Blackwell; it's just a number. And this is Blackwell sitting next to, this is the most advanced GPU in the world in production today. This is Hopper. This is Hopper. Hopper changed the world. This is Blackwell. It's okay, Hopper. You're very good. Good boy. Well, good girl. 208 billion transistors, and so you could see, I can see, there's a small line between two dies. This is the first time two dies have abutted like this together in such a way that the two dies think it's one chip. There's 10 terabytes of data between it, 10 terabytes per second, so that these two sides of the Blackwell chip have no clue which side they're on. There's no memory locality issues, no cache issues. It's just one giant chip. And so when we were told that Blackwell's ambitions were beyond the limits of physics, the engineer said, so what? And so this is what happened. And so this is the Blackwell chip, and it goes into two types of systems. The first one is form-fit function compatible to Hopper. And so you slide on Hopper and you push in Blackwell. That's the reason why one of the challenges of ramping is going to be so efficient. There are installations of Hoppers all over the world, and they could be the same infrastructure, same design, the power, the electricity, the thermals, the software, identical, push it right back. And so this is a Hopper version for the current HGX configuration. And this is what the second Hopper looks like this. Now this is a prototype board, and Janine, could I just borrow?
That is Jensen Huang, the CEO of Nvidia, speaking there at the company's GTC conference in San Jose, talking about the new processor that they've just unveiled called Blackwell, which handles speeds faster than the current offerings that they have right now. And of course, these chips underpin AI, which is what's been driving Nvidia excitement in Nvidia shares over the last year. Let's stay with the tech space and talk a little bit about SAIC, because this is a company that just came out with results today. It's a Fortune 500 company and provides engineering, digital, and tech services to the U.S. defense and space agencies. And while its latest earnings did miss analyst estimates, the company is forecasting higher revenue and free cash flow for 2025. I'm pleased to say joining us now is Toni Townes-Whitley, the CEO of SAIC. Toni, so good to speak with you.
Good to see you, Scarlett.
So SAIC, I found out, stands for Science Applications International Corp. And you provide tech and people on the ground to assist with programs run by the three branches of the military and other government agencies. We were showing pictures of Jensen Huang, the CEO of Nvidia, which is, the poster child for all AI investments these days. I want to ask you about AI. How much AI do you currently utilize, and how do you anticipate incorporating it into your services in the coming years?
Yeah, thank you very much for the question. When we think about our enterprise differentiators, operational AI is one of the 5 areas that we are investing in, have continued to invest in, and we use across all of the national defense agencies, the intelligence arena, as well as in the federal civilian government. And so we think about operational AI uniquely around the data layer, making sure that data is clear, is accurate, is tagged correctly, and using AI in the most real-time mission-critical operations, generally around national defense.
Got it. Thank you for explaining that. I noticed when I'm looking at your biography, before SAIC, you were at Microsoft. You were running government and regulated industries. What do people in the private sector tend to misunderstand or get wrong the most about how the public sector operates?
Yeah, even from Microsoft, one of our excitement areas as a hyperscaler was to try to take our models and algorithms to real-time mission-critical operations. I think what people misunderstand about the public sector, sometimes in the national defense arena, but really across, is that we have a different way that technology is procured. There are very complex mission-critical realities of how to integrate, and that's why SAIC takes an approach to be agnostic to technology, to be open in our architecture and how we build and integrate, to work in very secure real-time environments, because we want to plug and play technology and innovation from a small business, a startup, a large business, from many different domains. But you have to understand the mission, and our expertise is understanding the mission, all the mission requirements in some of the most complex environments around the world.
Toni, are investors being a little bit too harsh on the company? The shares were down nearly 10% today, and results were not that bad. You are booking plenty of intelligence contracts.
It's a fair question, Bonnie. Listen, I think, we had 3 of the best quarters SAIC has had in the last decade, triple beat in many areas. However, we're making some investments. I came in to push an agenda of organic growth, particularly profitable, sustainable organic growth. And that meant we put a strategy together that we are beginning to implement. And in that strategy, we're making investments in our innovation and differentiation, investments in our business development and capture capability, and upskilling a number of our individuals, our employees, so they can move at the pace of technology for our customers. In those investments, we expect a return within the next 12 to 18 months. This is a business that doesn't turn on a dime, return in a quarter. This is a business that happens over 18, 24-month segments, given our procurement cycle. So we took a hit. I know we're starting to rebound now, I've already seen the numbers, and I think we will see that trajectory. We've had a phenomenal year, and there's no structural impediment why we can't grow beyond mid-single digit, and we're going to prove that out over the next couple of years. But we are going to need to make investments, and I think the investors initially reacted to the margin effect of making some investments early on.
And Toni, I have to ask you, I mean, you're not even in the job a full 6 months yet. It must be pretty daunting taking on something like this. What's the biggest challenge for you right now?
Look, I think you play many, many roles as CEO, not only engaging with the street, engaging with your board, engaging with your team. But I think what's important to understand is we're in a very, very volatile environment. The defense and threat environment is changing with all of the various skirmishes around the world. We have a very unpredictable budget environment with the Congress and moving forward with, we finally have now, a budget that's been approved, and yet even that has variability. So there's a number of elements in the equation that we have to rationalize to understand how to meet our customer demand. I'm super excited, though, that we've got some of the best talent acquisition that we've had, our lowest attrition of some of our high-tech individuals. So we're starting to find out that our portfolio is uniquely differentiated with some recent wins, particularly in our Space Force arena and other parts of the defense market. So, look, there's a lot of goodness that's coming. But yes, it's a complex job. It's a multivariate equation. You got to solve for it every day.
Yeah, the government is kind of a wild card in that case, especially with those budget negotiations. You mentioned talent. You succeeded Nazik Keene at SAIC as CEO. So it's rare to have one woman CEO pass the baton to another at a publicly traded company, no less. What are you doing, or what's the single most important thing you are doing to ensure there's a robust pipeline of female talent and black talent at SAIC for the future?
Yeah, I've been super pleased with the work that's already been done before I got here at SAIC in terms of representation. A lot of focus on parity, leadership parity, having the leader pipeline look like the non-leader pipeline in those groups that you identified, women and people of color. What you'll see now is a focus on ensuring that we've got career mobility, that on those points of career that are most career moving, those assignments that are critical, that we have a diverse slate for all of those assignments. And quite frankly, we're getting the word out that SAIC is a phenomenal place to work for applied innovation when you want to work sort of in the gritty real-time environment of a government mission. This is a great place. And we know that there are so many women and people of color in STEM that are coming out, that are graduating from these top schools, that we are going to attract more than our fair share to SAIC going forward.
All right, Toni Townes-Whitley, CEO of SAIC, thank you so much for joining us.
Thank you. Thanks for having me.
And Vonnie, you look at how markets traded on the day. We did have a gain, but it felt very much like we're in this wait-and-see scenario, waiting for the Fed, waiting for this Nvidia developers conference that's taking place. Markets did move higher. Equities certainly did. Bonds went the other way, but not by a whole lot.
I think that it was a case of coming out of the gate like really fast. And then, throughout the session, we did see a little bit of the enthusiasm come off. But you did see the Magnificent Seven still up 2% as an index.
Yeah, although Bitcoin did not
forget about
put on the gains. It's done. You called the top in Bitcoin.
No, this particular rally is done, right? I mean, we're $6,000 away from the previous top.
What happened to all the talk about Bitcoin adding momentum as it approached the halving or halving?
Maybe get Michael Saylor on the phone or someone, and then it'll be good again. No brats. Where is he when you need him?
Exactly. All right. One of the catalysts, of course, of the equity rally today was Nvidia. The stock is not moving that much in after-hours trade, but the CEO, Jensen Huang, is still speaking live. Let's listen in again.
The memory is now amplified. FP4 effectively doubles the throughput. This is vitally important for inference. One of the things that is becoming very clear is that whenever you use a computer with AI on the other side, when you're chatting with the chatbot,
Relocating from New York to perhaps more affordable cities like Miami and Austin used to be a power move for those earning at least $100,000 a year. But new data signals the financial gains of moving south might be fading. Here in studio with more is Bloomberg News personal finance reporter Francesca Maglione. So Francesca, explain to us why those gains might be fading.
Yeah, so we looked at data from 2019 to 2023 of people that were moving from New York to Miami, Dallas, and Austin to kind of understand if, it's still worth it, those savings are still in place. And what we found is that since 2019, the savings have actually gone down 30% from those moving to Miami, and in those moving to Texas, 20 to 25%.
There is still a savings, just not as much of one.
Yes, definitely, yeah.
So talk about what's driving that. What's the factor that's most influencing that reduced savings?
Yes. So of course they're still saving. New York is still the most expensive city to live.
You want that, Sophie?
No, I said or lose.
But what's driving that decrease in savings is that as more people move, housing costs are getting more expensive, and that's basically what's driving inflation. And even though New York is still the most expensive, inflation is growing at a faster pace in those cities like Miami, Dallas, and Austin that are seeing a higher influx of people moving there.
So, your story deals with people that make $100,000 or more, but for those who make a lot more than that, there was a tax benefit as well, right? But some of them have been moving back. What's the story? Why?
Well, it seems like as more people move, again, the home prices are the biggest driver, and as companies move to these cities as well, we've seen that maybe those savings aren't there anymore, and it's just not worth it when you start calculating how much it costs to relocate and all of that.
Yeah, maybe the schools aren't there either, and if more of your cohort moves back, that could...
Well, exactly, because you build out some infrastructure, right? So some of the same steakhouses as in New York sort of opened up. But, even my hairdresser who used to go down there, every couple of months really has stopped going down because people are coming back now and they're just going back to them in New York.
Yeah, New York is regaining some of its mojo. When you look at the different cities that had benefited from this flight, this exodus out of New York, which cities are still leading when it comes to that savings from New York?
Yeah, so Austin is definitely the place that's leading when it comes to moving there. And Dallas is a close second. And in 2023, we saw that Texas overtook Florida in terms of people moving there as being the state with the most people moving.
All right, Francesca Maglione, thank you so much. Bloomberg's personal finance reporter. Texas, of course, also a beneficiary of the whole tax situation.
Yes.
But I think one thing that maybe people don't factor in is you don't necessarily have the infrastructure there set up to receive this big of an influx of people coming in, right?
True.
Like there might not be as many doctors readily available. There might not be as many services as readily available because it was designed to support a community of a certain size, but now you have this huge influx all at once.
Well, exactly, right, Scarlett? So what you gain on one side, perhaps you lose on the flip side because you're suddenly driving 200 kilometers or 200 miles to get that service that you sort of had at your doorstep in New York. But, it can be done. I mean, Nashville started developing as a kind of a metropolitan city some time back when, some of the financial companies moved there, and apparently it's a very easy place to live. So perhaps, Texas can stick it out.
Yeah.
It depends where in Texas. Texas is huge. Are we talking Marfa? Are we talking Austin? Are we talking,
Yeah, Austin and Dallas for now, but it's certainly something to keep an eye on. All right, we want to head back to what's going on in San Jose, Nvidia's GTC conference there, where the CEO, Jensen Huang, continued to hold court with his keynote speech.
An exaflop for training, and the world's first one exaflops machine in one rack. Just so you know, there are only a couple, 2-3 exaflops machines on the planet as we speak. And so this is an exaflops AI system in one single rack. Well, let's take a look at the back of it. So this is what makes it possible. That's the back, that's the back, the DGX MV Link spine. 130 terabytes per second goes through the back of that chassis. That is more than the aggregate bandwidth of the internet.
All right, we finished the day with gains, at least in equities, not so much in treasuries, but a big catalyst for tomorrow's trade will be something that happens overnight. The Bank of Japan set to deliver its latest rate decision, and potentially some big changes are in store. Joining us now to look ahead is Bloomberg's Enda Curran. Enda, we're looking at a couple of big changes here. Walk us through the different possibilities.
Yeah, so it's the most closely watched BOJ decision in decades. A policy change is expected, but we have some details from the Nikkei in Tokyo making the point that the BOJ will probably pull out of the negative rate. They will stop its purchases of ETFs, which it has been doing since around 2010, and it will also stop its yield curve control program, which it launched back in 2016. And these have been kind of cornerstone policies in the BOJ toolkit in the years of Abenomics as to try to reflate the economy and get inflation going again. So it would be quite a seismic move if all three did happen at the same time. Perhaps why this news is coming out in the local press now to lay the groundwork for it. It should be said, though, that the wage negotiations last week were harder than expected, and that did seem to green light the idea among economists that the BOJ will have, at the very least, to pull out of the negative rate territory.
Yeah, so they were much more successful for the workers, right? Wages increasing by more than 5%. As you said, and we did get a tidbit of what we might hear tonight from the Nikkei. That report out 4 hours ago. Now, we didn't see much of a reaction in the yen, a little bit of an immediate reaction. But is that a sign that markets won't be roiled by whatever we hear in the next few hours?
Well, if, all three in one meeting would be a lot, probably more than I think was expected. But that said, I think if we were to pull back the lens, most people wouldn't be surprised with the BOJ adjusting its policy. The question was whether it was going to be in March or April. Clearly, the conditions haven't necessarily merited a negative rate for some time. I think that's been a part of the talking point on the BOJ. And even with the YCC, there are plenty of people who say that long lived outside its usefulness or shelf life. So that's not to downplay if these moves happen. They're very significant. It's very symbolic given where Japan has been so many years. Yeah. And of course, it means it's moving in a different direction to other central banks, but the markets seem to be taking in their stride so far.
Yeah, I'm still struck by, any of these single things coming to fruition, but to have all three of them, right? Ending yield curve control, ending ETF purchases, and exiting negative interest rates seems like a lot to do all in one go. Is this about the new central banker, Kazuo Ueda, putting his stamp on the central bank?
I mean, it is, and this is significant. I mean, as we all know, for years and years and years, the BOJ was moving deeper into expansionary territory, and now we have what is clearly potentially a major shift on their part. But when Governor Ueda took over, he acknowledged that some of the policies are unsustainable. They're having a skew effect on the markets. We know the outsized impact the BOJ is having on the bond market, for example. So there have been plenty of critics and skeptics saying the BOJ needs to pull back, needs to get out of the way. We consider what's happening with inflation now, and the growth story wasn't as bad as expected last year after all. As I say, a lot of economists are saying if the BOJ didn't go in March, they're going to have to move in April anyway. And if they didn't, that would be a bigger surprise.
All right, Enda Curran, thank you so much for giving us a preview of what we would expect from the BOJ in just a couple of hours. Let's look ahead to what else we're watching. Of course, Bonnie, the BOJ decision coming out overnight is just the first of many, many central bank announcements.
Yeah, exactly. I mean, obviously there are many more coming this week, but I do think we have to mention that the BOJ experiment in monetary policy will have to be hailed as one of the more successful, in monetary policy lifetime, right? It was this phenomenally crazy experiment. Yeah. And now it looks like maybe it worked. Maybe it's, gotten the moribund economy to grow again and to, see some inflation.
Years and years and years in the making. All right, coming to stateside, we also have some economic data on the calendar. We've got housing data, building permits, housing starts, because as we know, the new construction market has really been the part where you can get some, or a lot of home buyers feel they can actually get something as opposed to the existing home sale market.
And if mortgage rates are coming down, which, we think they are at some point this year, then that will be good. And we saw it today. The National Association of Home Builder sentiment was above 50 again, coming in at 51.
All right. And of course, tomorrow we've got a Bloomberg surveillance special. The team will be live from Bank of America's trading floor. We've got John Farrow and Lisa Bromwitz speaking to the one and only CEO of Bank of America, Brian Moynihan, and a couple of other big market thought leaders who will be checking in with.
Interested to hear what Savita Subramanian will say, particularly after Goldman has reduced its call now. Jan Hatzius reducing their call from 4 cuts to 3 cuts this year. And of course, Michael Gapin, head of economics.
All right, that does it for Bloomberg's The Close. Balance of Power is up next. Have a great evening. This is Bloomberg.